Welcome everyone to the Kendall Report. What a day we had, huh? One of the more volatile days I've seen. And I'm going to do something tonight that I normally don't do. I'm going to replay the 5-minute graph that we were through. I saw somebody mention that we were in that they were in the live room for the first time today. It was crazy. And I want to show you, I did a Twitter Spaces this morning on the open and for about 45 minutes. And I'm going to show you what I was talking about. Those of you that were on there, appreciate you showing up and all of that. And so we'll go ahead and, excuse me one second. We'll go ahead and rerun that because I want to show you a number of things. And you folks see this market grid every night, all this stuff. I want you to see how adaptive this is in a real-time mode. It's pretty phenomenal. This led to some really nice trades today. So I'll just do that, but it's also a recap, and it has a lot to do with what I'll talk about tonight. So we'll get into that here in just a few minutes. So remember, before I go through the rest of this video, to subscribe, hit that like button right now. If you're on here live, make sure you hit the like, and make sure you hit the notification bell so you'll know when I come live every night. So here's the thing. The Fed appears to be absolutely committed to being behind the curve, and they're doing nothing to give any kind of leadership or anything as far as what's going forward. I saw somebody mention in the comments that now there's a 75% chance that there's going to be a 1%. Well, 2 weeks ago, there was only a 25% chance. So, now that they see the numbers. So, I mean, it's pretty bogus to even consider those numbers on the Fed funds futures. They've been bogus for as long as they've been around. So I wouldn't put a lot of weight on that. Will they raise 1%? Yeah, they should have raised 2% 6 months ago. So they're really way behind everything that's going on. And this inflation is looking in the rearview mirror. And as far as when we get PPI today, on Thursday morning, I'm not sure it's going to have the same impact. Is it going to come in hotter? I don't know. The expectations I have here is for a 0.8 increase compared to CPI came in 1.3 to 9.1 year over year was an amazing number, but everything was so overdone. You'll see this morning when I was on that Spaces, it was just, we started seeing all kinds of formations that I talk about in our live room all the time that set up, that was telling us that this market was going to rebound in a big way, which it did. But these numbers are coming out tomorrow. I joked that if we got that kind of bounce out of the CPI 9.1, imagine what would happen if we came in hotter on the PPI, and we'd probably go vertical on that. But the expectation here is for year over year 10.4. The previous was 10.8. So the story that's out there, this the peak? That was the question. I watched some of the Bloomberg coverage early on when the number came up. I got up at about 4:45 this morning. Spent the whole day trading in the live room, everything. So at 1 o'clock Pacific time today, when the markets closed, I was pretty bushed. I took the rest of the afternoon off. So that was 16 hours ago. So anyway, here I am, and as I told everybody in the live room the other day, these broadcasts actually help me a lot with just having focus on what's going on with the markets and all aspects. So I really appreciate you folks being part of this community. I love watching. Actually, it's fun to watch everybody trying to be first on the chat room. So I appreciate your enthusiasm. I really do. It's well received here. We'll put that out there. So what's the other thing going on? The dollar, right? The euro's hanging on the edge of this parity trade, and it's still hanging in there. I don't think I'm going to cover the dollar. I went through so much detail in the last couple sessions that we did, that the numbers that I talked about, if you want to go back and watch yesterday or even the day before's session, I went through a lot of detail expectations for these currencies. And, the dollar still looking, I'll just mention that, still looking for 111 plus. It's 108.40 last I looked. And like I said, the euro's hanging on to this parity trade. And you would have thought it printed under parity for like a half a second this morning, and you would have thought the world was ending. I had Bloomberg on. It was actually quite hilarious. It was like a comedy show to watch how these people were responding to this number. And it's so the media, at least I don't watch CNBC because I can't handle Jim Cramer. Okay, so and most of the characters that are on Bloomberg are a little better, easier to deal with. But the point is that what we saw today was the initial panic. I'm going to replay this in a minute, and you'll see it actually spiked up to, I think it was 3870 plus, and then literally in about 8 trades, and went from 3870 to 3750. And I'm going to play that because I want you to see how this thing played out today. And it was actually fairly easy to figure out we were going to come back up over the 38 handle. And I know a lot of folks on Twitter were saying, hey, good call. It wasn't a good call. This is why I decided to do this. It was all the math was right on the screen, right in TradingView today. And that's exactly what, why I called for that, because the patterns were set up. All, as I said earlier, all the probabilities were set to move back above 3,800, which it did. And I think we traded as high as 32 or 34, 38, 34 at one stage before we faded into the close, and a little fade overnight so far. So we're down 1150 overnight so far. So let me see if, just look at the notes. Yeah, so we got to talk about one more thing before we move on. The Beige Book came out. I thought it was pretty mixed picture. Everything that we really knew, I didn't see that was that big a deal. There was a couple of the Fed presidents talking around, and all this stuff. So what if, I'm just going to say it, so what if they raise it by 1%? What does that mean? It means they're still behind, okay? And folks talking about one of the things that is significant, and I just, I'll cover this when we talk about the interest rates. One of the things that is significant, if the Fed does raise rates at the rate they're going at, we could see the Fed funds rate at above, we'll call it 350. If we had the Fed funds at 350, that's when I'm going to be on the yield curve show. And I've been talking about this. I keep forgetting to hook up this device that I have. Maybe I'll do that tomorrow night for the end of the week, but show you what this yield curve looks like. And I'll do a book suggestion as well for you folks tomorrow night. We'll do that at the end of the week show. But yeah, this was just I didn't see anything in there that was really too big. And I just mentioned, we'll cover it here in a minute, but Bitcoin is actually doing really well. It's up 4%, back above 20,000. I talked about it maybe starting to break loose, maybe act like an alternative. We'll see how everything plays out. So let's go ahead and we'll go through the database first, talk about what's going on there, and then we'll get into the replay, and then I'll do the normal analysis that I do every night. So here we go with the Wavetech database. We did have 1,563 sell signals, 521 buys. So we just had a net 1,000 sells. And we moved from 50, let me just double check here where we were. We were 52.52 2 days ago. So now we are at 47.1. Still above 42 handle on the percent bullish. I know everybody wants me to be super bearish. I'm having a hard time. I'll talk about this when we get into the technicals. But that the configuration here continues to have some kind of a weird positive twist here. I almost feel like these analysts that are still predicting, good earnings going forward in spite of all what would appear to be evidence. But these models, not that they're going to be right, but typically, like I've told you before, there are right now 7,600 symbols that are still in a trend mode, have not broke their trend configurations. And that's what this is about. It's about identifying the trends as well. And I'll probably go through, once I do the replay, I'll probably show you something which we call the Wavetech 250, and Wavetech 150 indexes that we built, and we're going to start doing some things with these that I think will be real useful to the community, especially when we start to see some turnaround in the market at some stage. That will happen one day. Whether it's right now, like I said before, looking for these short-term rallies really haven't played out very well from that standpoint. But this configuration on the database is not that negative. We didn't get a blowout, and that to me is still positive. And I stick with the data. I'm very disciplined to this database. I've been hanging around this database since, I guess, effectively 1997, 98, when we first built the first virtual portfolio manager. And so I've been watching this database for so long, and it's grown. I remember when the total database was 6,000 symbols, and now we're at 16,138. So there's something to be said for looking at the big universe instead of looking at a couple of indexes that are top weighted, cap weighted, and all the indexes to make a decision about the markets. This database has saved me so many times and saved all of our customers, institutional customers over the years, so many times. It's just been amazing. So on an intermediate basis, we're still only 8% long. So we don't own 92% of all the symbols out there right now. So it's not like it's bullish, but it is short term. It's still trying to figure out where it's likely to go. So let's go ahead and let's get into running this replay. So this will just take me a minute to get set up. It should be ready to roll. I'll let you know here in just a second. Okay, so I have TradingView set up here. There's going to be a new bar every 2 seconds, so it's not going to take us long. It's going to take us less than just a few minutes to go through the replay, and I may pause it and show you a couple of things. I still have not found a good drawing tool for Windows 11. Absolutely hate Windows 11. It's just probably one of the worst updates ever. And unfortunately, I'm kind of stuck with this thing right now. But anyway, let's go ahead and start this replay, and I'll pause it once we get going just to start. So get ready, hang on. We're going to relive today. You're going to see a big spike here when the report first came out, and I've talked about this fade trade. If they would have given another 30 seconds, it would have given an opportunity to get short. Here we go. Get ready. You're going to see 2 bars, a 5-minute bar. You're going to spike up. There it goes. And then spike down. So I want you to watch what happens here. So I'm going to pause this just for a second. I'm going to pull this over just so we can start to see what happens. But what I want to show you is how, when you folks see this market grid every night, this is going to show you how fast it adjusts to volatility. And I think this is pretty phenomenal here. So let's start back So I'm just going to pause a couple times. So it won't take us too long to get through this, but you already see within 3 or 4 bars, the volatility collapses down. These are the Wavetech, the webs here. And what we're seeing is this webbing. This is a sign that there is a bottom coming in. When I did the spaces this morning, I think there's a replay there so you can hear it. And but when I saw this is exactly what a bottom looks like. Now, I didn't know at this time whether the market was going to rally back or not, but let's just play this again because I think this is interesting to see. So you'll see, I'm going to keep pausing this for a few minutes. The market grid all of a sudden starts to tighten up, and you'll notice that the bars stay within the grid. And so we have the 10-period moving average coming down. We have the PPM 1, 2, 3, and this is a Wavetech 2000 on the bottom, and 200. And what we're going to see is a crossover on these indicators, and then you'll see the magic start to happen. And I saw this happening this morning, and we'll let this run for a few minutes. So you're going to see the webbing start, and then all of a sudden you get this blow up. And what I want to show you here is right here where we were starting to get price objectives. These are real-time Fibonacci swings. We were looking at 37.96 was already starting to come out. So we blasted into there, and then we had a replay. You'll see a couple things happen here. You'll see some downward projections come in. So we traded all the way up to around 90 there. I want you to see also that the PPMs just shot up, started to give signals. Now we're in a neutral mode, and hopefully I'll let this play. We're starting to get projections right here, these numbers right here, 3804, 3821, and this orange line here is a 200-day moving average. So all of a sudden I'm getting projections here, and what I was seeing is that the probabilities are telling us that this was an ABC, this is going to be the next sequence up. Okay, so I'll let it run and try not to stop it too much. We'll just let this run. So you can see, and this is going to take us right up to the real-time mode where we are right now. So there we are, we hit fib target 1. Now the market grid is right at the 200-day. We're going to print right to that number, get rejected around there. Now we're getting some downward fib targets right now. We're going to print down into fib target 1, I believe between fib 1 and 2. Here we go. PPMs are negative. And now we're starting to see the market grid turn up. And now we got objectives way up here at 52. There was a moment in time today, folks, that we were about to just explode to the upside. And there was some big sellers came in and hammered this thing down, but I just let this go. Now you see the downward fib target starting to be dominant here at 37.93. This was the blast up above the 200. I believe we went here to, this was the high at 32. And then now you're seeing the new fib targets on the downside here. And we're going to trade down in, and you'll see some things even as we come into the close. Right now, this is about 11, this is 2 o'clock, and we're still getting these upward projections. So the pattern was still valid at the time. All of a sudden, we start to get these downward projections here. So it was a very choppy, this period right here we went through about an hour of just some very choppy markets. But I just want you to see the ranges. Now we just got some new fib targets set up for 38.40. We're never going to print there. The market grid got up there for a second, but all of a sudden, as we started to come into the final hour, we started to get these downward fib targets coming in, and it's going to hit fib target 1 here, and then ultimately, as we come into the close and move into toward, I'm just going to let this run, so it'll only take probably another minute or so to get through there. But you can start to see these fib targets starting to show us that we're going to go down. The PPMs are all negative. Not going through all the values here, but this is, everything is pointing negative as we're coming into close, and this is roughly the close right here at the 97, 96 level. Now we're into the reopening of the markets here in just a minute. So 1600 at the bottom is going to be exactly, we're going to be around, I believe 1800 will be in there. So this is worth watching, I think, because this is what's setting up. I want you to see what's setting up right now as we come in to this level. So we just got some big downside Fibonacci targets down here, which are interesting, down to 37.44. And when I bring up the normal analysis, I'm going to talk to you about what's going on here technically. But I thought this was one of the more fascinating trading that I've seen for a while. Say we're all of a sudden here we're starting to get upward projections again back to 38.05. We're getting pretty close to current here right now. And everything's starting to tighten up. The ranges on the downside. This long dot right here, 37.74. I'm going to tell you folks to watch that number. That is the key pivot in this pattern right now. And if we trade below that, that would be negative as we come into tomorrow. And okay, so now this is real time right now. Okay, so right now we've got a recalc here, 38.01, 38.05. So there's targets for further recovery here. So let's get over to TradeStation. And I appreciate folks being patient to watch that. But then what I think a lot of folks ask about these, about not only the PPMs, but all the patterns here that unfold. So you get to see how these things react. Every day, it's like like watching paint dry when I bring this up every day. But I wanted everyone to see exactly what the power is when you have these things projecting real time and guiding you right into the patterns here. But so there's some interesting things going on here. Now we're into our normal analysis, and what we're seeing here is we're basically flowing down along this 21 period moving average. I'm going to bring this stuff over here so you can see what's going on with the grid here. So far on the grid overnight, we printed 75 low, and S1 is 37.85, S2 37.63. So we've printed below those levels, and I'm going to show you, I think this is important. Today on Wednesday's action, we printed down to 52, and you folks will remember these numbers. The previous low that we printed was a 44 print, and we had a 41 print, and that's along right over here in this last level here, and we got a print way down in 36, but since we made this level here, we had this 44 and then 41. This is the two levels here on 6:30 and then on 7/1. That was on a Friday, and we got that reversal up. We rallied up, and now we're still in this sideways range. I know it certainly didn't feel like it on that replay we just watched this morning, but we're still in this sideways range. And right now we're trying to get back above these levels here, and the 38.15 is that 21 period moving average. I think the market's going to seek to get above there. It's interesting that you notice the PPMs down below, that they have actually PPM 2 is turned up. PPM 1 is trying to go back up. It's up 0.1 right now. So the configuration still, it's really hard for me to get super bearish in this pattern here. And if nothing else, looking for a rebound back over the 21 and the 10 period moving averages, which are at 38.15 and 38.40. And it looks to me we want to get up there at some stage. If we do that, then we're going to turn the PPM 3 back up, and we're still going to have a chance at the upside. So I have, as far as I'm concerned at the moment, the key numbers are going to be that 37.41 is going to be the number to watch. So if we blow that out tomorrow, then we'll have to argue that the downward Fibonacci projections down here that I kind of discounted last night will be in play. That's way down at 33.84. So that would turn this whole chart pretty negative. And I'll wait till tomorrow night. I'll cover the weekly chart as we come into the end of the week. And like I said, Thursday will be big. Wednesday and Thursday, obviously, with CPI today. And on Thursday, the PPI numbers. And then on Friday, we have a barrage of financial firms. And also, I didn't mention this earlier, but JP Morgan reports they actually kick off the real earnings, and that is going to be, I think, an interesting report depending on how that comes out, and maybe that'll set the tone into Friday. So there's plenty of stuff other than PPI coming out, and and inflation. So the markets have a tendency not to be able to walk and chew gum at the same time. They can only focus on one element at a time. Everything is about inflation. But it's really, there's much more out there. So the earnings is like I said, just kicking off. So we'll see how that goes. So let's get into the flow of the usual show here, and let's take a look at the Nasdaq. So as always, the configuration's a touch stronger. PPM 1 is actually up 0.16, up 0.15 on PPM 1 and 2. So they're pointing toward the potential to trade back above the 10-period moving average. We're at 720. That's 829, and 730 is the 21. So we're trading right now. The high's been 733, trading at 720 right now. So we're already back to that point. And I think if we look at the market grid for today, we're probably looking on both of these markets. Worst case would be S2, but S1 is printed. And it's really hard to make this call with the volatility that's going on with these inflation reports. So markets got very emotional today. I don't know. I think a lot of people got burned on that reversal. So I'm not sure they're going to be real excited about getting involved in that same play. We will see in the morning. But the pattern S2 should hold. R1 is 849. That would put us up in toward this number right here at the 10-period moving average and above. But I would look for S2 R1 minimal. We could see more than that depending on how the Morgan news comes out, how the inflation news comes out. Maybe they'll have the whole moderation story will play out today. It's going to be an interesting one again, folks. So we'll see how that plays out. But this looks to me a similar type pattern with the PPM3 actually crossing through its first derivative here. Just tells us there's going to be some pretty good resistance at 11,964. So next market is the Russell. Russell's got all of these indices, as you would expect. They're somewhat of a high correlation between them. So they're all looking the same way as far as that goes. Yesterday, Russell was down the least. It was only down 0.12 on the session. So it was a relative basis, the strongest. But we're going to have to get over this 10-period moving average here, 1736. And same, like I said, I have a hard time getting too bearish here with these PPMs looking like this. And, down here when we were printing these lows, we were also in this pattern here. We had a very similar, these are advanced, I would call them advanced stage as far as the bottoming process goes. And I know it's hard to, with all the emotions and the volatility that you're feeling, that it's hard to see this pattern. And it feels sort of like it's the third quarter and we're down 2 touchdowns. I realize how that feels, but I think there's still some things that can happen here from the standpoint of this configuration. Okay, we'll bring up the 10-year here. 10-year had absolutely crazy trading day. If we look at the range, we had a high of 307, a low of 290. That is insane. And I actually think that I mentioned this, I know, last week sometime, but I do want you to realize that the volatility in the treasuries is going to be much higher than it has been. And that's due to a major buyer disappeared, which is the Fed. They're now letting things run off, so they're not participating in anything. And that's going to affect volatility pretty substantially. They were a stabilizing factor in this market. And so we're just going to start to see these crazy volatility. Now, it's interesting, they're talking about rates going up. If you look at these PPMs, we got a minus 1.01, minus 0.38 on PPM2, and we have downward fib projections for 2.77, 2.59. So these are big numbers. Let's take a look at the weekly. And this plays out here because these are numbers that I've talked about before. 271 is the 21-period moving average. And we look at the grid itself. 291 is S2, so we printed 289. So not quite. S3 is 281. But there's more downward pressure here than upward pressure, okay? So that probably suggests, we're 2 weeks away from this Fed meeting. If the Fed wanted to really show that everybody, all of us, that they're serious about what they're doing, then what they would do would raise rates tonight while the markets are closed. They'd announce at midnight tonight that they're raising by 1%. That would be significant. They're not going to do it. As I've talked before, it goes back to Ben Bernanke, and then we had Grandma Yellen, and now we got we've got Powell here, which he has no guts whatsoever to do anything significant. And they think they're just going to micromanage this thing into some sanity and what's going on with interest rates, and they're not going to. So, but the markets are not pointing to higher rates, and especially on the 10-year. On the front end, we did see some more inversion from that standpoint. Like I said, I'm not going to be convinced until the scenario that I talked about when we first came on, which would be that we have Fed funds at 3.5 and everything on the back end of the curve is lower. Like I said, I'm going to make a note to myself here real quick here to to draw the yield curve that I'm talking about. So let me just make that note. Yeah, so I'll make sure I do that tomorrow night. But just understand that the markets on the longer end, on a 10-year, are pointing to lower prices. And meanwhile, like I said, we've got the dollar printing higher numbers. Everything's printing higher, and it's we've got the president of the United States over on his knees in Saudi Arabia trying to get oil from somebody who can't even meet their production standards for today. Like they can make a higher output of oil. It's not going to happen. All of these, the OPEC are out of places. We've got oil here, right? We all know the answer. No one wants to do it. And, even though the energy secretary and everybody claims that, hey, with all these wells can be turned on, they can't. The Permian Basin is what it's all about. And, that there's just a lot of issues in there. It's permitting and it's a whole lot of stuff. So this is being engineered intentionally, and I'll go into the oil here next. But the point is that all of these the interest rates, all these things that we're seeing here are telling a different story than what you would read in the headlines or watching any of the Bloomberg or whatever. That's pretty much the only TV I watch. I don't really watch any of this CNBC. They're just idiots on there. So not all the guests, but the people that are on each segment are just ridiculously inept about everything they do. So let's go ahead and take a look at the crude oil here. So crude had a fairly ugly day again. This is the weekly we'll start with. Same thing here. Everything's rolled over. I continue to tell you to be careful with the energy stocks. I think there's a lot of issues around them from the standpoint of having any kind of real bounce. I think that trade's crowded yet. I think a lot of people got caught in the crowd and now they're trying to talk their position and from that standpoint. But just looking at the commodity itself, we got negative 0.77 on PPM 1. And I've been talking about that. That is going to be a cap in the market. And right now that's 108. Last week we printed up to 111 and just collapsed here again. So it's becoming more and more obvious from a recessionary standpoint. Last night's video was named that crude is projecting for a recession, and I believe that's the case from that standpoint. But we are trading down toward the lower levels. If you look at the low 93.67, STX 92.96, so we're pretty close. We're below S3 on a weekly, and we are almost down to STX. So we're about at the extreme for the week, but these are all negative. The PPM2 is still a positive 0.60, but you can see it's losing the momentum quite a bit. And there is still a little bit of a probability to rebound back towards 102, 103 even from these levels. Let's take a look at the daily and just see what that setup is, and that'll give us a bit of insight. You can see here, we started getting this bubble bottom. We rallied into the moving averages, but as in the weekly, we see a lot of momentum. If we look at the PPMs here, they've turned up a little bit. PPM1 is a minus 0.92, PPM2 minus 0.91, and minus 0.25. So we're in downtrend mode across the board on crude oil. Now we're getting potentially close to the 200-day moving average, which right now is 90.77. I think we'll hold around the levels that I mentioned on the weekly. But guess what? On Friday evening, we'll get an update on these on the weekly market grid, and we'll have to see how this is set up on Sunday. But everything is in a downtrend here, and I don't know what you folks are seeing. I finally saw a minimal drop in prices, at least on a retail level, just recently, but it's nothing to really talk about. And I did think it was funny that I saw a report that everybody should take a deep breath because the administration is now forecasting a drop in gas prices by 50 cents, all the way down to 4.50. I mean, how funny is that, right? So we're just, but the thing that's happening here on crude oil, this is a story being told, and whether we hold around the 200 and stabilize, I suspect we will, somewhere around these lower levels, 90, 95, and then I still think we bounce back to 100 plus in this volatility range, because we've already, like I said, we were at 111 just last week, and now here we are, down at 93, and we saw that similar bounce off of 95 before. So I do think that prices will stabilize here, and we'll see if we can set up any kind of pattern that would suggest that this daily chart can actually make a turn. I'm not sure that's going to happen at the moment. So there's definitely some work. We're starting to see, I talk about this formation here. Let me go full screen for a sec. as we get into what I call a box formation on the market grid where it squares off. And usually what that means is we're going to stabilize and stay within that in that range. And so expect this, and that's set up quite a bit of volatility. If we look at that's 101 extreme down to 90s, 77 for this week. And we'll see if we stay in the box and we get the update in the next couple of days as we come into next week. That will be a key to let us understand what's going on here. All right, we'll start off with, we haven't looked at the daily gold. There's just nothing here. I think somebody I talked to on the Twitter Spaces this morning off the open was asking about gold. Do you think this is the bottom? I'm not sure. I made the comment, I'll make it here again, is that based on the strength in the dollar, gold should probably be at least in a 16 handle, maybe even a 15. It's just not in a place to do anything good here. And we are starting to get some signs that we're maybe setting up a bottom. We've also got the box formation here, and those ranges are 1760 to 1710, and we're looking at the lows. If we go to yesterday, the low got down to 04. So if you look at STX yesterday, it was exactly 1704. 1704.70, and the low was 1704.50, and we actually bounced off of that number pretty good. So the grid is holding here, and I think this is significant. And there was obviously a pretty decent trade if you're a gold trader there, but as far as any new trend starting to develop, that's not happening at all. Let's go to a weekly just for a second here, and then we'll finish with Bitcoin and call it quits. So here we are, the weekly 1715 is the 200-week moving average. We printed down to 04, as I just mentioned, 450, and we're trading right at 1726. We're just trading just above that 200 week. So I was talking about that last week, that we could see that print. We've gotten it, but look at the PPMs here, folks. I mean, these are really big, ugly numbers. This is a big, big downtrend. I'm not sure it stops here. And if we throw up, I'm just going to throw up the monthly here for a second. We start looking at some of these numbers here. We're below the 40-month moving average. That's at 1766. But we come in, 1694 is the extreme for this month. So we came almost to that level, to the STX. But we start looking at these PPMs here, and this is a secular downtrend here in gold, and it may end up meeting with the 200-month moving average, which is at 1470. So I'm not, as far as the pattern goes, there's just a ton of downward pressure here. And like I said, this is the beginnings of a potential secular downtrend. And we'd have to go, if I move this out of the way for you here, if we go back to the last time we were up at lofty levels, you can see that we were into a multi-month, and maybe we could say we're kind of started at the same level here around the 1960 level on this nearest futures chart. And you can see we just declined for, the better part of 12, 14 months here into the lows. So if that's the case, we're in another 10 months of this pattern that's going to unfold. So the final market I'll cover tonight is the Bitcoin, been talking about this for a while. We continue to be, I've got the weekly up here under the 200-week moving average. Let me bring the pop-up over here on the screen so you can see exactly what's going on here. We still have a downward pressure of the PPM1 at a minus 0.5.09, minus 2.69, and 2.16. So definitely a lot of downward pressure here. Right now, 24,842 is where that 10 is. It's dropping $2,000 roughly per week. So per week. So when we come into next week, that number is going to be 22. And unless we see it looks like we're trying to get a crossover here on the PPM. If we can get a cross up through the second derivative of the PPM, maybe then we can see some moderation of this downward pressure. But that is going to be a ceiling on the market around 22. I don't see us getting below that. I'll bring up this number because I'm not sure it has a lot of significance, but it's out there, and that's actually not calculating anymore because we got this rally. But there are 8,600 projections on the downside. I'm going to blow this up because this is ridiculous to try to see here. If I just come up here, you can see that the market grid has just really contracted to the volatility is extremely low. And the last time we had just a market grid signal where we got an STX buy signal was way over here when we closed at 22, but we traded down to 20,000. And you see we just have been drifting along that line for a while. The moving averages are sitting right here right now, 2378, 2409, and then the 40 is up above there. But the 10 and 21 are sitting right here. And possibly, if we could get, and we're trading right into those numbers right now at 2235. So if we got over 20,409, maybe we could get a move up toward 2223. The PPMs on a short-term basis are much more friendly, and I've been talking about this for a while. Let me blow back out here so you can have a little more perspective. Is you can see that the improvement in the PPMs, all three of them are trying to turn up. PPM1 is actually in an uptrend mode. So that's encouraging, I guess, from that standpoint. And it's suggesting that we will get above this 20,377. Actually, the high so far today has been 20,399 on this platform. And so look for, if we get above that, possibility of a 22 to 23. But it's impressive here that what we have going on is this sideways consolidation that I've been talking about. We've been locked in this range for a while. So I don't expect it to go far because of those weekly numbers, but I'm still very impressed because there's been a ton of reasons to crater this market, including today on the correlations with the early this morning. I really wasn't looking at Bitcoin this morning, but you can kind of see that you can see the range here, 18,921. So it was down, but just rebounded pretty substantially here because we're looking at 4% right now. Pretty decent rally, you have to say. So whether the so-called whales are in here buying or not, we'll have to find out. So anyway, this will be the end of tonight's broadcast. I just want to thank everybody. I hope you found it interesting showing how these indicators work real time. I mean, they're crazy. That works on stocks or anything. So it's so powerful to see these things unfolding right in front of you in real time calculations and projections. And I know, like I said earlier, everybody was praising me that I said, hey, we're going to get back over 38 handle. And the only reason why is all the probabilities, all the patterns, everything, the PPI, everything was projecting that. And that's why I wanted to show that to you. So anyway, Thanks a lot, folks. Remember to subscribe, hit the like button, and get these indicators. They will make you a bunch of money. I mean, this is my give back to this community. So, and it's a one-time fee, and you can use Market Grid with a free TradingView account. You don't even have to pay for it. So anyway, I hope, and you also remember, you get access to the live trading room. So I appreciate that. I don't know who it was made a comment, but welcome to the trading room. We'll see you tomorrow at 1 o'clock in the trading room. And I might do something, folks, if I'm up trading like I was this morning. I will actually sit there and maybe I might start the room a little earlier. So I'll put a tweet out that I'm starting. So make sure you also follow me on Twitter. So it's Portfolio Expert, Twitter/Portfolio Expert @Portfolio Expert. And there's no E in the expert. Okay. Thanks a lot, folks. Thanks for watching again. I'm sure we got lots to talk about tomorrow night after Thursday's action. Be safe. Have a good day trading, and hopefully you'll make some money. We'll see you tomorrow night. Hey, Gary, I'll adopt you.